Welcome to this explainer. Today, we are diving into one of the most profound, yet completely under the radar shifts happening in global finance right now. Look, for years, the conversation has been absolutely dominated by Bitcoin, Ethereum, and, the endless speculation surrounding smart contract platforms. But right beneath the surface, there's a structural transformation of money taking place. We're going to take a calm, analytical look at how digital dollars are quietly but surely becoming the underlying financial infrastructure for an entirely new economy. Think about this. While the world's attention has been totally captivated by wild price swings and the loud, flashy headlines of digital assets, a digital dollar like USDT has just been quietly climbing the ranks. It's actually approaching a point where it could very well sit right behind Bitcoin in market cap. But here's what most people miss. It was never even trying to be digital gold. It was trying to be digital money. Its real purpose, all along, was to become the foundational layer for a new digital economy. So let's jump right into Section 1, a bank without branches. Let's explore exactly how a silent revolution has built the daily liquidity and settlement layer for the digital economy, and doing it all without opening a single physical office. Every single day, literally billions of digital dollars flow across blockchain networks. To put that into perspective, stablecoin settlement volumes frequently rival major credit card networks. That is massive. This isn't some theoretical future tech. It's the unglamorous, everyday economic heavy lifting that makes the entire digital asset ecosystem actually function. Let's break down what that heavy lifting really looks like. Stablecoins are settling transactions and providing the vital liquidity that exchanges absolutely need to operate. They're facilitating international, cross-border remittances, connecting the highly experimental world of decentralized finance with traditional centralized finance, and acting as the primary collateral for trading. These tokens provide an invisible 24/7 liquidity layer. It's a lot like electricity or the internet. I mean, you don't think about the power grid when you flip a light switch, right? You only notice it if the power goes out. Without stablecoins, much of today's digital asset ecosystem would just freeze. Moving on to Section 2, the tokenization of money. This is no longer just a story about a single digital dollar. For many people, stablecoins are just a temporary parking spot for capital. Actually, scratch that. That dramatically underestimates reality. We are witnessing the tokenization of money itself. Whether it's USDT, USDC, PYUSD, or EURC, they represent a financial system where value moves instantly and globally, 24/7. No waiting for banks to wake up on Monday morning, no agonizing cross-border settlement delays. If the initial wave of blockchain digitized ownership, stablecoins are digitizing money itself. And when money becomes native to the internet, entirely new financial ecosystems start operating at the speed of data. Which brings us to Section 3, Modernizing Global Financial Rails. This evolution has fundamentally outgrown the crypto markets, and the heavyweights of traditional finance have definitely noticed. The rise of stablecoins is now a massive geopolitical and financial story. Traditional banking institutions are waking up and launching their own digital currencies. Why? Well, because they realize that whoever controls the core infrastructure through which digital money moves is going to shape the entire future of global finance. This isn't really about replacing banks anymore. It's about upgrading the incredibly outdated financial rails that sit beneath them. And it's not just the banks either. Major payment companies are quietly but aggressively modernizing their underlying networks. They're integrating blockchain settlement to tap into that instant, borderless nature of stablecoins. History shows us that every great economy depends on efficient payment infrastructure, and the payment giants know for sure they have to adapt to these new rails or risk being totally left behind. Furthermore, the world's largest asset managers are exploring tokenized finance. Institutional capital is recognizing that stablecoins aren't just some passing fad. They represent the essential foundational layer required to build a fully tokenized financial ecosystem. Think about it. You simply cannot have instant settlement of tokenized real-world assets without a native digital currency to settle them against. And because of all this undeniable institutional momentum, governments around the world are racing to design regulatory frameworks specifically for stablecoins. Nations are acknowledging that this is a major geopolitical financial shift. It's not just a neat technological trend. It is literally the new architecture of global capital. Let's look at Section 4, Storing versus Moving Value. To truly grasp how this architecture of tomorrow works, we have to completely change how we think about the assets themselves. A lot of people still compare Bitcoin and stablecoins as competitors, but they solve completely different problems. Bitcoin is designed to store value, providing digital scarcity to protect wealth. Stablecoins, on the other hand, are designed to move value, providing the digital liquidity needed to power daily economic activity. They are two complementary pillars of the digital economy. The future financial system probably won't force us to choose between them. It will simply require both to function properly. Which brings us to the ultimate end state here, the TCP/IP of finance. The more this digital infrastructure grows, the less visible it's going to become. Just like nobody thinks about the TCP/IP protocol when they hit send on an email, we are rapidly approaching an incredible day where billions of people will use stablecoins daily to buy a coffee, send money home, or settle a business contract, all without ever realizing they're interacting with a blockchain. That is what true, successful infrastructure looks like. It completely disappears into the background. There's a great saying, the biggest financial revolutions are rarely loud. For years, the blockchain space was so focused on creating entirely new forms of value. But today, the focus has shifted to transforming how value itself moves around the world. True infrastructure is built quietly. Then, mass adoption follows. And only then, long after the fact, does the rest of the world look around and realize that everything has permanently changed. As the very nature of money transforms right beneath our feet, I want to leave you with this thought. If a digital dollar eventually becomes the second largest digital asset in the world, the real question isn't whether stablecoins have won. It's what that victory represents. Will you recognize the silent revolution of the stablecoin economy before the rest of the world catches on? Are you investing your time understanding yesterday's loud headlines or tomorrow's invisible civilization?